Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, March 5th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. The previous session here, a very narrow range of price action here across all the equity futures here as the market awaits Fed Chair Powell in a couple of days. Wednesday and Thursday, Fed Chair Powell speaks 9 a.m. Central both days and testifies. That's going to be all eyes on Fed Chair Powell and to see what comes out of those hearings there. Friday we have NFP report. So the first couple of days of the week likely to be mostly range bound here, and we've already seen the first one come and go as mostly range bound. A little bit of a pullback here developing here on day 2 of the week, but again you can see that the uptrending nature of this market remains fully intact. We have new pivots now for the new month of March that are higher value relationship here, which means any pullback into this zone could be used as an opportunity for bulls to defend and return prices to new highs until proven otherwise. A failure of this idea comes at this level right here. That's 49.93. That's the previous month's midpoint. Any failure at that midpoint starts to open up the lower areas down below, specifically into the previous month's low. That's about the 48.70 level, and into the LVN just below at 48.50. That could still be an opportunity, even if price comes across that range, to be an opportunity for bulls to defend as well. So again, quite a bit of bullish price action here over the last 4 months, now turning into the 5th month here. But early this week here, expecting a little bit more range-bound, quiet price action here as the market awaits Fed Chair Powell Wednesday and Thursday. Now the key level to watch early this week is going to be 51.05. 51.05 is the previous week's midpoint. We may see a test at that zone here early today, and a failure at that point could open up a bit more weakness into the previous week's low. Previous week's low was our key level for last week, 50.60. That was the key level to watch last week in case of a failure, and it ended up being the low of the week. Exactly. Price bounced off that low here, and again, if price can't stay above the 51.05 level, we may see a retest back at 50.60. So a couple of levels here to watch early this week. Now, keeping a look here at the NQ, this one's showing a little bit more of a pullback here overnight. We're seeing mostly range-bound action. The previous session, it fell just at the end of the day to kind of end at the end of the session's lows. Now overall, this one's sitting right on top of the previous month's midpoint. That's 18,100. 18,100 is the previous week's mid. It's now come back toward that mid from the previous week's high price here. And again, the expectation here would be for price to kind of remain in this upper half of last week's range. A failure at 18.1 starts to open up the previous week's low, which puts you into the 17.830 level, which is this level right here. So those are a couple of levels to watch. Again, this market remains mostly bullish, and we're now seeing a retest of the key range high here from above. So right there, it broke through the top of that level. It's now retesting it from above, rising bullish Pima trigger zone. This key range right here forecasts a target down the road of 19,000. 19,000 would be the upside target on a 100% expansion basis. 18.6 or 18,571 would be the 50% extension right there. So keeping above that 18.1 would be very important here. A failure there, and you start to rotate back toward the midpoint of that range. That's about 17,670. So that would be the target here in case of a failure. Now taking a look here at crude oil. Crude oil right now down 1 1/3% at the moment, 77.66. This one had a big time failed breakout attempt yet again. A big time breakout move here on a Friday, and then late in the day was not able to hold on to those gains. Didn't outright see a major failure, but was not able to really maintain those gains. The previous session here, we did see mostly range-bound action, and then it broke to the downside. Could not keep that range-bound structure the rest of the day. Instead, broke to the downside, closed on lows, and now we're seeing back-to-back days of weakness. 77.50 right now, the low of the session. You can see again, this market has been unable to break through that 79.80 zone and get going just yet. This is 80 bucks. That's the first time it has tested that level this year. Back before prices were allergic to this level, we have this rounded bottom that continues to develop here. This narrow 14-day range, thought that this was a pretty good breakout attempt here from that narrow range, but it failed. We're now back inside the boundaries of that narrow range, which could take us all the way to the other side of the range, which means 76 could be ahead. This low right here is 75.84. These lows right here, 75.50. So between 75.50 and 76 could be a downside target ahead. The previous month's midpoint comes in at about 75.50 as well. Right there, 75.46 is the previous month's midpoint. We could drop as deep as that and still see this thing kind of bounce back up and build another pivot on the right edge of this developing rounded bottom. At some point, got to get the break through these highs. That break will open up the upside, but clearly this market is being held down at the moment and just can't make a move to the upside. So early today, the idea here is to watch to see how price responds here to the previous week's midpoint. It's already through it. Previous week's midpoint 78.30, and we're down below it right now. So any pullback into that zone could be sold. We could continue to see weakness here up ahead. That takes us quite a bit lower. Again, like we said, back toward the 76 level, perhaps even the 75.50 level. The previous week's low puts us at 75.82. So again, the pullback phase right now is in full effect here for crude oil as it failed to get a breakout from that narrow range. Remember, I mentioned this narrow range has about 8 to 10 points of energy built into it. It had a great strong start to try to break out, and now it is failing back into the range, which again can take you all the way back across that range at some point down the road. Now taking a look here at gold futures, this one had an explosive move to the upside. We mentioned this range right here had about 60 to 80 points of range. 80 points would take us up to about 2120, and it did it in a couple of days. Bang, bang. We forecasted from this low right here, which is about to just call it the 2040 level. 2040 plus 80 puts you right at 2120, and it got there really, really quickly. About as bullish as this thing has been in a very long time, especially on a 2-day basis. Now it's stacking a third day of strength, which is very, very rare to see one big day, 2 big days, and then get another big day stacked on top of each other. You just don't see that type of movement. Even when you get 2 big days stacked on top of each other of price discovery, it's an indication that this thing is moving. We're likely going to go take out the previous high right there. That's 2152.30. We are through the midpoint of that major rejection day right there, and that's huge because again that puts us right to the highs, and that's going to take us to the all-time highs, the previous year's highs. And the way that this looks, this is what I've been mentioning before, this compression, the way it had built out, was very reminiscent of this compression back here, and we were about to see a lot of volatility come out of it, and we eventually have seen that breakout and are now seeing the volatility come out. So again, how much more upside do we get? Do we blast through 2150 and continue to push to new highs, or do we see some sort of higher high failure that brings us back into the range? Last time around, this thing broke down first, dropped into support, rallied back to resistance, and then continued higher to new all-time highs. We'll see how much volatility this thing continues to get, but very, very bullish, has already reached our upside target and is now approaching 2152, the all-time highs. Lastly, the YM. The YM here, very range bound still, very much slowing down compared to some of the other markets here, mostly sideways, very compressed. This thing is barely hanging on right now, with a fairly modest previous month's range. That's the previous month's range right here. The midpoint is here to close just above the mid. Suggests that this mid could be at risk of being broken through or failing into the previous month's low. Overall, that previous month's low still big time support and could lead to a buying opportunity. A failure there and you're starting to open up 37K. So right now still very strong overall in terms of the trend, but the short-term trend is mostly sideways and compressed, and it is compressed again heading into Fed Chair Powell's testimony Wednesday and Thursday, with NFP due prior to the RTH open on Friday. We could see fireworks here later on in the week. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.